Boom, we're live, ladies and gentlemen. Feels good to be in a bull market and the bias to remain bullish. That was a long time, what, almost 3 years of mostly downward trajectory through our trading range. So it's exciting to see this swift transition as adoption and I guess use by mainstream institutions acquiring this as an asset has pushed it to a mainstream collateral, and it's growing day by day. Now we're going to dive in. We're going to take a look at Bitcoin and Ethereum. Very exciting stuff, and we're going to keep it short and brief today. I just want to, again, take a broader perspective, look at everything that's going on. That way everyone can get a, I guess, I want to share my long-term outlooks because we're in the very beginning of the bull market. I don't know how many times I've said that, but this is the very beginning of the bull market. I'll say it again just so I can reiterate. Any of the positioning here that we're using at this moment is just to find, I guess, lower points of support and supply and continue to build long positions. Now I've changed my strategy to slightly less leverage for a certain aspect of my account because we're getting a certain type of recovery so far and a tight stop loss. Now I made a mistake this weekend with Ethereum and I want to go over that next. So let's stay with us to the end of the video while I talk about what I did wrong in Ethereum this weekend. We'll see you guys in the charts. Bam! Okay, so we are looking at Bitcoin on the daily. Now, for those of you, we'll just quickly run through this. We went from phase C, we went through phase D together, that was beautiful, and now we're in phase E, the start of the SOS. Now, this is a really interesting time, and I want to talk about some potentials here. My first target was around 16,005 to 17,006 as the first kind of breaking point of the SOS. I want to measure now with my Fibonacci retracement tool from the top of this automatic rally down to the bottom of the spring. And you can see that was approximately where we're sitting right now is at the 1618, and again just above that. So I was demarking effectively the Fibonacci. Now there are two other higher extensions here that I want to talk about. There's this regression line here around 22,000 and a higher line here of 26,000. Now in the very beginning of a bull market, a lot of this, I think, supply being eaten up is to test retail as well as weaker hands, we'll say. We have to remember that when we say something like, there's a bunch of different ways to look at what types of institutions or monetary players are here. Last week, we used the idea of Renaissance and Jim Simmons Fund, who manages over $166 billion in assets, and they trade in and out of moves on a daily basis. They are what's known as a high-frequency quant fund, and they are the best there is out there, at least to this date, at what they do. And they've put everyone else to shame, from Ray Dalio to Warren Buffett. Absolutely. So what we want to remember is that because you have a different level of institution that's playing here, each of them are going to be buying different. The way someone like Medallion versus MicroStrategy plays is vastly different, and their sums of money are also vastly different. So what I want to reiterate here is that right now what we're doing is we're showing the sign of strength. The market's really testing what it can do when there's a diminished supply. This first drop that we had here will go in on the 4-hour time frame now. I'll get rid of the Fibonacci. Actually, maybe we'll even look at another one of the charts here just to clean it up a little bit. Yeah, we'll just go like this. So what I want to do now is measure from the top. Actually, let's go back to this and finish the conjecture in here anyways. So we've just had a beautiful run up, right? This first big change of character. So this was to the downside. Now, generally when you see a big move like this to the downside, it usually leans into becoming a new trading range. Something like this, horizontal, not most of the time, not always. As you can see, we've actually been still stubbed up against this longer term trend line like this, and we broke through that for the most part, at least this part of the trading range. Now again, we could get hyper retrospective, and we can look at the further areas of regression line that are down here. So what we might be seeing is that this is the first trading range that we're witnessing. So that's a pretty big deal, right? Remember, when we're looking for the top of our SOS, we were originally looking for it to come somewhere down around 11 to 13,000 back at this 1.2947 and at the top of our VPR line here. And it kind of poorly drawn in lines, but if we go back out to the daily, this will make a little bit more sense. So originally we were, before we got here, when we were way down here, we're like, okay, SOS, return, and then a longer term trading range like this. Now, this might be a really tight band. We've seen a lot of leading indicators right now that show a lot of strength here. So a lot of these bigger players are probably going to be leaning into positions. If there's a really tight band that starts to form here, you get something like this, and we see a larger horizontal trading range come through, something like this through 22,000. This could be a very bullish sign. Now, in the long term, I think it might diminish the type of bullishness we see short term, sorry, not long term, like in the immediate future, how quickly we say get to 80 or $100,000. But we're at a very, very, very important moment, which is, okay, first, we saw the initial change of character, which is for the first time since back here in August, we saw a drop down. Now the drop down was approximately, let's see, we'll jump over to the BTC futures. The drop down here and where we broke was about 16%. So actually quite a large drop. So there was talk about this 38% drop that consistently happened in Bitcoin before. And if you have been watching with us, you'll recognize this speculative kind of cornerstone chart that we had looked at before. So one of the things we could actually see here would be a horizontal trading range that came through and did something like this before going much higher. So this could leave us with an ultimate bottom of, say, $16,000. Right? If we get a horizontal trading range that starts to form right here, this could be a much different scenario, right? So we were expecting maybe a drop like this, and then another, I'll have to actually just, so there's a few possibilities, right, of where this trading range goes. Now, we had looked at this speculative megaphone. We'd actually looked at it on Ethereum as well. Very similar type of structure taking place. So we'll go back to Bitcoin. This is the Bitcoin futures chart. So what we want to speculate on now is, okay, well, we know we've seen our sign of strength come in. What does this new trading range look like? Because this new trading range might do something like this, right? Maybe it comes up to 20,000 right now, bounces back down to 17,000, puts a spring in to 16,500 before we see a big breakout, maybe even before we get to the bottom of this range. But this could be about March right here. So this is kind of the speculation I'm looking at and how I plan on taking advantage of this new trading range. Right now, I'm going to show you the mistake that I made in Ethereum, forgetting about the automatic the reactions in general in the Wyckoff methodology can be very powerful, but they can also be confusing, I think. So even though I wasn't in a trade with Ethereum, I was still sitting on my Ethereum profits, and that was nice. But there was a lot of momentum this weekend in the automatic rally, so I kind of want to go over that. Same thing, we'll start with Ethereum, looking at that speculative Jesse Livermore kind of megaphone aspect. We could hypothesize that maybe it was even shorter. I'd gone over this before. We were talking about 1, 2, 3, 4, 5, 6, and so 7 is what we're looking for as a downtrend, or maybe even a 7 like this, right? So you end up only maybe going down to 495, but you see the formation of a larger trading range take place here, where maybe we spike up to 680, 720, come back down to 530, and you see this spring, maybe even a drop. Who knows, right? It's all up to the markets to decide, and the supply to show us by giving way during its demand characteristics. Okay, so what does that mean for Ethereum on the short term, and what mistake did I make? So I want to show you the drawing that I had done. Okay, so here's what happened. I exited my trade at 6:04. Yay, profits, everything is exciting, good trade, Tio. Okay, so price comes down. Now, I didn't re-enter my trade here. And what's crazy is that I saw this first spring kind of take place. So let's go over this. We shared our ideas on distribution. I thought it was pretty clear. I guess one of the key takeaways too is that to remember we are in a bullish market. So even when we see distribution patterns, we should keep a general upside bias, but with very sharp stops in these particular places. So I made the mistake of just not entering without a stop. You know what? I went out, I said, I'm going motorcycle. Yay, Tio's gonna go for a ride and forget about the markets. Stupid 24 hours a day, 7-day a week nonsense. Like, I'm going out for a ride, I'm gone. So because of that, I missed this beautiful setup. Now I charted it because it only took a few minutes. And we actually saw this really beautiful reaccumulation pattern or accumulation pattern. And we've talked about the strengths of this type of pattern before, which is this rising gradient bottom. So here you can see the horizontal start to the trading range of your selling climax and your automatic rally to the middle part of the trading range. And this is what we want to keep an eye on for Bitcoin as well, because I believe that's what it's going to do. So we want to keep a bullish sentiment, even if it starts to go up and produce something like this, like again. So we're keeping a very close eye on Bitcoin because these are some of the final moments of the SOS and the LPS. So I don't want to over or underestimate its character. I just like to place my final trades and enjoy the rest of the ride, basically. So with this rising gradient bottom, what is so important is to recognize the ascending channel here. So I actually felt a little silly not taking this last part here too. It was Sunday evening, and I'm like, I looked at this, I'm like, look at this beautiful pennant, this tiny pennant, and it's a backup phase too. With you can see the coiling of strength here inside of the pennant, bang, bang, as it hits against this supply wall basically. So they're testing the supply, like power, bam, bam. And then will it go lower? Will it go lower? No. And then as soon as you didn't go lower here at this time frame, we shot up very quickly and made another big move. Now, what's interesting is that, again, if I was trading this weekend, this would have been a nice spring for my entry. I would have looked at it like, great, we're seeing a bunch of supply come in, at least to some degree. I'm going to place a limited stop trade. I was out riding my motorcycle, so life got in the way, and I stopped caring. But this morning, I jumped in for the last little bit of this. I saw this drop down here, which is also often, again, now these are very heavy risk plays, so always with a very tight stop loss, very limit loss type position. But this drop down here allowed me an entry at around 585 right here. Let's draw this out. 585 right here. And I rode up to 604, and then I took my stop at 604. Sorry, I took my stop here at 604, and then I had a podcast with Austin Griffith. So look out for that one over the next few days. Great. Ethereum is fantastic. Look, I think Ethereum has a lot of juice that a lot of people haven't recognized yet, and that's fantastic. We'll go over that in later videos. From a technical, from an investor standpoint, again, remember guys, we're in the very beginning, in the early stages of a bull market. If you're just buying spot, these are all good prices. If you're playing with leverage, you need to be a little bit more acute with your entries. It's just the way the game is played. Or you need to be significantly less in your leverage. My next plays are all going to be like basically open 1.5, 2x. Just like give me a lot of swing room, so I can enter a little bit more, not carelessly, but I can enter on LPSs without having to worry. I have 50% to the downside coverage effectively, so which is nice. Because these markets can be volatile, so you don't. If you want to have some type of open run, again, remember to use a stop loss, especially if you're playing with leverage. I like futures contracts. I think we're going to play a little bit more with those, only for entertainment's sake. So, like I said, we'll get into that. I think it provides a very unique way to add insurance when you get to those rather euphoric moments. Anyways, exciting stuff. I guess to some degree or another, there's two parts to this story. One, we are in the final stages of the SOS. So it could go higher still, 21, 22. Great. I never said I wanted to pick the top of this part. I said very clearly, the only part that matters to me is the automatic reaction after the selling climax and then those final tests. Because if we're starting to see a new trading range form in Bitcoin right now, out of the box, right? So we've got two main stories we're looking at. Here we are out of our main trading range. If we see a big trading range like this, and then maybe even a dip too, like down to 16,000 before boom, just straight out of here. that would be fantastic. So even though it might not be as low as the 13,890, a much bigger gap. I mean, 16% less than we had originally anticipated, which might be around 30%. Oh, I mean, it's not completed yet either. We have to keep our eyes open. But again, remember this as we were looking at it in the futures. This first big drop here is equivalent to the previous drops. So you have around 13% barred by another. Oh, this is around 20% here. Okay. So we're right in the range even on this. 13%. We're right in the range here for a potential new trading range. And again, remember, lastly, this could end up being a rising gradient bottom. So we may only see a bottom of 19,000. I'm not sure yet, but remember, we're going to find the final stages for the LPS and SOS ranges here before a full-blown bull market ensues, ladies and gentlemen. This is Tio with the Arcane Bear. Thank you guys for joining us today. Hope you enjoyed this market update. Let's see. I've got content things. So Friday. Okay, so we did a podcast with Austin Griffith, who created Build ETH, just trying to learn more about what's going on in Web 3.0. So shout out to Austin for what comes out, hopefully, probably Thursday. We've got a market content video, which we did today. That's Monday. We're going to do an educational video, so hopefully Tuesday or Wednesday will be that educational video where we'll go over something like futures. Now, again, I don't suggest ever using these things, but they can be used for insurance later on down the road when things get real euphoric. So keep that in mind and be practiced well for that. And then the rest of the weekend, we can do whatever we want. So thank you guys. I really hope you're looking forward to the next week's of what we go through. The private newsletter will be coming out on Monday of the first of this month. Or sorry, we're actually the first of the month is tomorrow. So not this Monday, which is today. Comes out the first Monday every month. Anyways, whatever, doesn't matter. Keep your eyes on your inbox for that. We've got our reaccumulation PDFs being finalized, and then volume for all of you that are in the private bear den. Be sure to join in on our webinar tomorrow, going over some of this stuff. It's always a learning process, so it's important to keep track and update as we learn more. So I'm really excited about that. And then that's it. Give us a thumbs up. Leave us your comments, your thoughts, all your ideas down below. Stay with the Arcane Bear. We're signing off for the next episode, and we'll see you guys again out somewhere beyond the bear cave.